Friends, thank you for being here today. What if I told you that the greatest threat to your retirement, your savings, and the American way of life isn't a political party, a virus, or a random market crash, but a specific date marked on a calendar in Beijing? And knowing that this date is fast approaching, would you continue to trust a financial system that is currently blinking red with warning signs that have only appeared 3 times in the last century? We are living through a moment of history that many are too distracted to see. It is a moment that feels eerily familiar to students of history, yet completely alien to those who believe that the prosperity of the last few decades is a permanent condition. We are standing at the precipice of a geopolitical and economic shift, so profound that it will rewrite the rules of global finance. The subject of our conversation today is not merely an economic forecast, it is a warning. It concerns a maneuver that has been executed in the shadows, a strategic repositioning of $8 trillion, a sum so vast it is difficult to comprehend, that signals the end of the era of cooperation and the beginning of an era of economic warfare. For those of us who have watched the world change over the last 6 decades, we know that empires do not fall overnight, but they do not last forever. We remember the fall of the Soviet Union. We remember the rise of Japan in the 1980s. But what is happening now is different. It is calculated, it is massive, and it is entering its final phase. Today, we are going to walk through exactly why and how China's $8 trillion move is designed to collapse Western markets, and why the year 2026 is the turning point we cannot afford to ignore. To truly grasp the magnitude of what is coming, we must first confront the immediate threat, the $8 trillion warning signal. To understand the magnitude of what is coming, we must first look at the numbers. Numbers do not lie, even when politicians and cable news pundits do. China has quietly, systematically, and ruthlessly restructured $8 trillion in foreign assets, currency reserves, and trade agreements. To put that $8 trillion into perspective, it is more than the entire economic output of Germany. It is more than the economy of Japan. It is more than the GDP of every single country on the continent of Africa combined. This is not normal financial housekeeping. This is not a country simply diversifying its portfolio. When a nation moves that amount of capital in a short window of time, it is preparing for something massive. It is the economic equivalent of moving entire armies to a border. And yet, if you open the Wall Street Journal or turn on the evening news, you hear very little about it. You hear about diplomatic truces and trade talks. You hear about agreements signed in October between Washington and Beijing to stabilize relations. But beneath the surface of these polite diplomatic gestures, the machinery of separation is grinding forward. The most alarming development is a specific directive that has come from the highest levels of the Chinese Communist Party. A deadline has been set. By November 2026, Chinese state-owned enterprises, the massive conglomerates that control the flow of resources and capital in China, have been ordered to divest from Western markets. This is not a suggestion. In the Chinese system, this is a command. It means that billions upon billions of dollars currently sitting in American real estate, U.S. Treasury bonds, and Western stock markets are being liquidated. They are selling, and they are selling now. In the last 24 months alone, China has reduced its holdings of U.S. Treasury bonds from over $1 trillion to under $800 billion. That is a 20% reduction in a bedrock asset class. For decades, China was the reliable banker for the United States. We spent money we didn't have, and they bought the debt. That relationship is over. They are dumping American debt. But where is that money going? It isn't disappearing, it is being converted. And while they sell paper dollars, they are buying hard assets. Unofficial estimates from global commodity traders suggest that China has increased its gold reserves by nearly 70% in this same period, while official numbers claim they hold around 2,000 tons. The reality, based on import data and mining output, is likely closer to 5,000 tons. They are hoarding gold. They are stockpiling oil, copper, and grain. They are trading paper promises from the United States for physical reality. This is the behavior of a nation preparing for a total blockade. This is the behavior of a nation preparing for war. Not necessarily a war of missiles and tanks initially, but a war of currencies and supply chains. This $8 trillion move is the warning siren that Western markets are ignoring. And by the time the divestment is complete in late 2026, the trap will have already snapped shut. Now, many in the West find it hard to believe this could happen, but we must look at the historical pattern, specifically the 4 stages of empire collapse. Many in the West find it hard to believe that China would intentionally crash the global system. After all, aren't they dependent on us? Don't they need the American consumer to buy their goods? This is the most dangerous assumption of our time. It is dangerous because it ignores history. This exact scenario has played out 3 times in modern history. The pattern is always the same. It follows a 4-stage sequence that leads inevitably to the collision of a rising power and an established empire. We are not in the early stages anymore. We are deep in the final act. It begins with stage 1, the foundation of dual dependency. This stage occurred between 1990 and 2010. This was the era of Kamarika. The West believed that by opening our markets to China, we would democratize them. We outsourced our manufacturing base to them. We gave them our technology. In return, they sent us cheap flat-screen TVs and bought our government debt, keeping our interest rates low. It felt like a golden age. Inflation was low, goods were cheap, and everyone was getting rich. Politicians told us that trade prevents war. They said that two nations with McDonald's franchises don't fight each other. We became addicted to their cheap labor, and they became addicted to our capital. It was a symbiotic relationship, or so we thought. In reality, it was a trap. We were handing over the keys to our industrial base. Then, the dynamic shifts in stage 2, asymmetric accumulation. From 2010 to 2020, the dynamic changed. China stopped just being a factory and started being an architect. They accumulated over $3 trillion in foreign reserves. But they didn't just sit on the money. They began building a parallel world. They launched the Belt and Road Initiative, spending over $1 trillion to build ports, roads, and bridges across Asia, Africa, and Latin America. They weren't doing this out of charity. They were building a trade network that does not require the United States. They created the Asian Infrastructure Investment Bank to rival the World Bank. They began developing their own digital currency. While the U.S. was distracted by wars in the Middle East and internal political division, China was quietly building an exit ramp from the American-led order. They were accumulating the leverage necessary to challenge us. This leads us to where we are right now, stage 3, strategic repositioning. The accumulation phase is over. Now, they are moving the pieces into attack formation. This is the divestment we discussed earlier. They are selling Western assets. They are signing currency swap agreements with Russia, Saudi Arabia, Brazil, and dozens of other nations to bypass the US dollar entirely. Consider the historical parallel of England and Germany in 1914. Before World War I, England was the global superpower, and the British pound was the world's reserve currency. Germany was the rising factory of Europe. They traded heavily. Everyone thought war was impossible because it would be too expensive. But in the years leading up to 1914, Germany quietly dumped British pounds and hoarded gold. They built financial networks with the Ottoman Empire and Austria-Hungary. They prepared their financial system for separation. When the war started, the British banks nearly collapsed in a week because they hadn't seen the financial weapon Germany had built. We saw it again with the US and Japan in the 1980s. Japan accumulated massive dollar reserves and bought American icons like Rockefeller Center. They used that leverage to crash the US stock market in 1987. We saw it with Europe and Russia in 2022. Russia spent 10 years building a fortress economy, hoarding gold and diversifying away from the dollar, specifically so they could survive sanctions when they invaded Ukraine. China has studied these examples. They are currently in the final months of stage 3. They are cutting the cords that bind them to the West so that when they pull the trigger, they won't go down with us. And finally, we arrive at the stage that begins around 2026, stage 4, controlled demolition. This is the moment the rising power weaponizes the dependency they spent decades creating. They don't need to bomb our cities to hurt us. They simply need to stop buying our debt and stop shipping our medicine. In a controlled demolition, the objective is to break the will of the adversary by collapsing their economy. By triggering a crisis in the Western financial system, China aims to force the world to accept a new order, one where the yuan, backed by gold and traded on their systems, replaces the dollar. It is a transition of power not by treaty, but by trauma. Before we move deeper into the internal mechanics of this collapse, I want to pause and hear from you. This historical pattern is controversial to some, yet undeniable to others. Do you see these parallels repeating in our current economy, or do you believe this time is truly different? I really want to know what you think, so please leave your thoughts in the comments below. To understand why China is accelerating this timeline now, we must look inside the country at the two Chinas paradox. It is easy to view China as a monolithic giant, but the reality is far more complex. There are, in effect, two Chinas existing simultaneously, and the friction between them is what makes the situation so volatile. On one hand, we have China A. This is the China of the headlines. It is a nation of perhaps 100 million people living in the top-tier cities. This China is a technological superpower. In his recent New Year's address, General Secretary Xi Jinping boasted about their dominance in artificial intelligence, their new aircraft carriers with electromagnetic launch systems, and their breakthroughs in advanced manufacturing. This China is confident. It is aggressive, it has a chip on its shoulder, and believes it is destined to rule the 21st century. This is the China fueling the new Cold War. But then there is China B. This is the China of nearly 1 billion people. This China is suffering. It is old, it is poor, and it is angry. The economic foundation of this second China is rotting from the inside out. They are in the midst of a property crisis that makes the American 2008 crash look like a minor correction. Between $15 trillion and $20 trillion in household wealth, paper wealth tied up in uncompleted apartments and falling real estate prices has evaporated. Local governments are drowning in debt. Youth unemployment is so high they stopped publishing the data. Deflation is setting in, meaning people are afraid to spend money because they think things will be cheaper tomorrow. This creates a death spiral for an economy. So, why does this internal weakness lead to external aggression? History teaches us that when authoritarian regimes face internal collapse, they rarely go quietly. They look for external enemies. They manufacture crises to rally the population around the flag. The Chinese Communist Party cannot fix the property bubble. They cannot reverse the demographic collapse caused by the one-child policy. So, their only option to maintain legitimacy is to deliver on the promise of national rejuvenation. That means taking Taiwan. That means defeating the United States. The economic war is not just a strategy for global dominance. It is a survival strategy for the regime. They need a conflict to justify the hardship their people are enduring. They are racing against time. They know their demographic window is closing. They know their economy is structurally broken. This makes them dangerous. A rising power is a threat. A peaking, desperate power is a hazard. They are repositioning that $8 trillion not just to hurt us, but to insulate themselves when they smash the break glass in case of emergency button in 2026. So, how does this actually happen? We need to examine exactly how the collapse will be triggered. What does the controlled demolition look like for an American retiree or business owner? It will likely not be a single event, but a coordinated cascade of crises designed to overwhelm Western response mechanisms. The first pillar of this attack is the financial assault. The United States government is currently running trillion-dollar deficits. We rely on foreign nations to buy that debt to keep the lights on. China is the second largest foreign holder of that debt. In the stage 4 scenario, China doesn't just slowly sell, they dump. Imagine if they coordinate with Russia, Saudi Arabia, and other BRICS nations to sell hundreds of billions in U.S. treasuries all at once. The market for our debt would crash. When bond prices crash, interest rates spike. Suddenly, the yield on the 10-year treasury isn't 4%, it's 8%, maybe 10%. Mortgage rates would jump to 15% overnight. The housing market would freeze. But the real problem is the U.S. government. If interest rates spike, the cost to service our national debt becomes unsustainable. The Federal Reserve would face an impossible choice. Let the system collapse into a depression, or print trillions of dollars to buy the bonds themselves. If they print the money, we get hyperinflation. The purchasing power of your dollar vanishes. If they don't, we get a depression. China knows this. They know the Fed is trapped. At the same moment they crash the dollar, they will offer the solution. They will roll out the gold-backed yuan, or a BRICS currency unit. They will tell the global south, countries in Africa, South America, and Southeast Asia, the dollar is broken. Come trade with us. Our money is backed by gold. Our payment system, SIPS, works. Countries, desperate for stability, will switch. That is the end of the dollar's exorbitant privilege. The second pillar targets the real economy through supply chain strangulation. For 30 years, we allowed China to gain a monopoly on the most boring, yet critical parts of the supply chain. We aren't just talking about iPhones and plastic toys. China controls between 60% and 90% of the active pharmaceutical ingredients used in generic medicines. Antibiotics, blood pressure medication, chemotherapy drugs, the raw ingredients come from China. They control the processing of rare earth minerals essential for electric vehicles, fighter jets, and wind turbines. In a conflict, they won't necessarily declare a total embargo. That would be an act of war. Instead, they will use bureaucracy as a weapon. They will require new export licenses. They will conduct environmental safety reviews that take 6 months to process. Suddenly, shelves at CVS are empty. Factories in Detroit shut down because they are missing a $2 sensor. Panic ensues. Inflation spikes not because of money printing, but because of scarcity. They will show the American public exactly how dependent we are. They will try to break our will to fight by threatening our standard of life. While the economic war rages, a military pressure cooker is building over Taiwan. We have already seen the dress rehearsals. The Justice Mission at 2025 military drills were a blockade simulation. They practiced cutting submarine internet cables, severing Taiwan from the world. They fired rockets into the waters surrounding the island. By 2026, China aims to normalize these drills to the point where we can tell the difference between an exercise and an invasion. This keeps Western markets in a state of permanent anxiety. The cost of shipping through the Taiwan Strait, where 50% of the world's container ships pass, will skyrocket. Insurance rates will become prohibitive. They are creating a gray zone conflict. Not quite total war, but definitely not peace. It creates an environment of uncertainty that capital hates. Investment will flee the region. The goal is to isolate Taiwan and force a capitulation without a full-scale amphibious invasion, all while the U.S. is distracted by its own domestic financial meltdown. Despite these clear signs, many investors are blinded by comfortable lies. Despite the data, despite the speeches from Xi Jinping, and despite the historical precedents, many in the West refuse to believe this is coming. They comfort themselves with three specific lies. The first lie is that mutual destruction prevents conflict. People say, China needs us. If they crash the dollar, they hurt themselves. This is the logic of a rational businessman, not an ideological revolutionary. Germany was England's biggest trade partner in 1914. They went to war anyway. Japan relied on the U.S. for oil and steel in 1941. They attacked anyway. Putin knew Europe bought 40% of its gas from Russia. He invaded Ukraine anyway. Nations do not prioritize GDP above all else. They prioritize national security, ideology, and regime survival. China is willing to take an economic hit if it means displacing the United States as the global hegemon. They have spent 15 years building the Belt and Road, so they have other markets. They don't need us as much as we think. The second lie is that the dollar is too big to fail. There is a belief that the US dollar is invincible, but history is a graveyard of reserve currencies. The Dutch guilder was dominant, then the British pound was dominant for 150 years. It seemed eternal. Then, within a decade of bad decisions and war, it was gone, replaced by the dollar. Currencies are based on trust. When you hold $34 trillion in debt, run massive deficits, and weaponize your currency through sanctions, you erode that trust. The world is actively looking for an alternative, and for the first time, China is providing one. The dollar is not immune to the laws of gravity. The third and perhaps most dangerous lie is that we can rebuild manufacturing quickly. There is a fantasy that if China cuts us off, we will just open factories in Ohio and South Carolina next week. This is physically impossible. Building a semiconductor fab takes 5 years. Rebuilding a pharmaceutical supply chain takes a decade of regulatory approval and construction. If the crisis hits in 2026, we cannot solve it with factories that won't be online until 2032. The gap between the crisis and the solution is where the pain lies. That is, the window of vulnerability China will exploit. Beyond the markets, we must prepare for the dawn of a new, divided world. Friends, if we step back from the charts and the bond yields, we must understand that this is not just a financial correction. It is a civilizational divergence. We are facing the end of the global village myth that has dominated our thinking since the fall of the Berlin Wall. When China pulls the trigger in 2026, we will wake up to a world that is not just poorer, but fundamentally fractured. We are witnessing the birth of a bipolar world, and the consequences will seep into every crack of your daily existence. This great decoupling will manifest first as a splinter net. For 30 years, we have taken for granted that an email sent from New York arrives instantly in Shanghai, that information flows freely, and that business communication is borderless. That era is ending. China is not just building a firewall for its own people, it is expanding its digital iron curtain to encompass its allies in the Belt and Road Initiative. We will see the emergence of two distinct digital ecosystems, a Western internet and a Sino-centric internet, incompatible and mutually hostile. Doing business with half the world will not just be difficult, it may become technologically impossible and legally treacherous. The free flow of information, the very lifeblood of modern innovation, will be severed, creating echo chambers that fuel further conflict. But the most visceral shock will be to the American standard of living. We must be honest with ourselves. The American middle-class lifestyle of the last 40 years was subsidized by Chinese labor. We exported inflation to them, and they sent us deflation in the form of cheap goods. We got used to the Walmart economy, where televisions, clothes, and tools were artificially cheap. When the decoupling happens, that subsidy ends. We are not looking at a temporary spike in prices. We are looking at a permanent structural reset of what things cost. Imagine a world where a replacement part for your car costs 3 times what it does today and takes 6 weeks to arrive. Imagine a world where the cheap consumer electronics that pacify our population are no longer available. This is the return of scarcity. It is a return to an era where disposable income evaporates, swallowed by the true cost of domestic production and inefficient supply chains. The psychological toll of this cannot be overstated. A society addicted to abundance will face a collective withdrawal symptom that will tear at our social fabric. We will see the end of the everything, everywhere, all at once culture and a return to regional limitations. Furthermore, we must prepare for the moral and political realignment of the globe. Countries will be forced to choose. The non-aligned movement will disappear. Nations like India, Brazil, and Saudi Arabia will have to pick a side, not based on ideology, but on survival. Who provides their energy? Who buys their grain? Who backs their currency? As the US dollar's influence wanes, we will see the rise of the resource bloc, a coalition of nations that produce actual things, oil, food, minerals, aligning against the financial bloc, nations that produce services and debt. This is the long twilight of globalization. It is the dawn of a fortress world. It means that the passport you hold, the currency you save in, and the jurisdiction you live in will matter more than they have at any point in your lifetime. We are moving from an era of efficiency to an era of resilience. And efficiency was profitable, but resilience is expensive. The world of 2027 will not be a world of open borders and global citizens. It will be a world of hard borders, trade barriers, and suspicion. This is the reality beyond the balance sheet, and it is the reality we must prepare our children to navigate. So, where does this leave us? We must talk about protecting your legacy and the steps you can take as an individual. I know this information is heavy. It is frightening to consider that the stability we have known might be ending, but panic is not a strategy. Preparation is. The timeline is our greatest asset. We know the directive is set for late 2026. That gives us a window of time. The elites, the billionaires, the central banks, the family offices are already moving. They are buying gold. They are buying farmland. They're getting out of general equities that depend on Chinese supply chains. First, you must understand the window. The next 12 to 18 months are the preparation phase. Do not assume the markets will warn you. The crash in stage 4 happens overnight, but the setup takes years. We are in the setup. Second, you need to reduce your exposure. Look at your portfolio. If you are holding long-term U.S. government bonds, you are holding the very asset that is being targeted. If you are invested in companies that derive 40% of their revenue from China or manufacture 100% of their goods there, you are exposed to the divestment order. Third, look at strategic allocation. Historically, when fiat currencies fail or are challenged, hard assets survive. Physical gold and silver have been the insurance policy of civilizations for 5,000 years. They are not an investment to get rich. They are wealth insurance. Look at domestic resilience. Companies that make things here in America. Defense contractors, domestic energy producers, American agriculture. These sectors become vital when global trade breaks down. Fourth, consider practical preparedness. This is not about building a bunker. It is about common sense. If you take a specific medication, talk to your doctor about having a 3 to 6 month supply. If you need specific electronics for your business, buy them now. When the supply chain squeeze begins, it will be too late. Friends, the $8 trillion move is not a statistic. It is a declaration of intent. China has shown us their hand. They have told us their deadline. They are following the same 4-stage pattern that collapsed the British Empire and challenged the American economy in the 1980s. The controlled demolition is approaching. The two Chinas, one rising in arrogance, the other crumbling in desperation, are converging on a collision course with the West. The comfortable lies we tell ourselves will not protect us from the mathematics of leverage. If you are finding this analysis valuable and want to be part of the community that is preparing rather than panicking, please take a moment to hit the like button and subscribe to the channel. Your support helps us bring this critical information to more people who need to be ready. History is screaming the answer. The data is clear. The pattern is undeniable. The era of blind trust in the global system must end for you today. We cannot stop the geopolitical tides, but we can build an ark for our families. We can position ourselves on the right side of the wealth transfer. The collapse of the old way is inevitable, but your financial survival is optional. It depends on what you do next. Thank you for your time, and let us face this future with eyes wide open.